What's up, guys, and welcome back. It is a Friday afternoon, and I'm sitting here, and I'm almost cropping myself out of the top of this picture, but that's okay. So, interesting times in the VIX. Well, not really, because nothing's happening, but interesting times in ACB because my scalp, once again, did work so far. So, ACB... I bought it paying $360, sold it at $380, bought it again $364, and now it's up again, which makes me happy. But let's not talk about that. Let's talk about the VIX. And I've been trading UVXY here and just messing around with it. Really weird action here. For example, December options. Okay, I'm just messing around with like trying to trade in and out of this position I have on, which is a big sort of condor thing. Anyway, so December 12th puts, okay? The market this morning was 3 cents bid at 12 cents, something like that. So I go in and I'm going to pay a penny over the bid. So I go in 4 cents bid, filled immediately. Just a one lot. You bought one lot, paid 4 cents. So then I go in like a half an hour later. I'm like, that's curious. So then I go in a half hour later. The market is 4 cents bid at 9 cents. And I offer one at 8 cents. Filled immediately. So at that point during the day, the only trades on this strike were somebody selling me one for 4 cents and somebody buying one for 8 cents. So how does that happen? What does that mean? It's pretty weird. Unfortunately, this account is under $25,000, so I can't like just scalp back and forth all day. That takes up one round trip just doing that one little trade. But weird, scalp 4 cents on the same strike in an illiquid option. It just seems strange. I don't know if there was some sort of resting order or why that would happen. Let's see if I can pull up my activity here to show you what I was talking about. So if you look at my activity behind me here, I'm not going to go into this for too long, but I will get out of the way for a second. If you really want to look, you can see in the activity here what I'm talking about. Here, down here, it's buying a put for 4 cents and selling it back for 8 cents in like 5 minutes or 8 minutes, 7 minutes. Very strange. Beyond that, I just have this condor on, condor decaying by a certain amount per day. Sorry, I was in the way. If you want to look at that, there it is. Condor decaying by $42 a day. Now, these prices are just all over the board because these options markets are really wide and, the P&L bouncing anywhere from like 6,000 to 10,000 all over the place. So you really need to know your markets ahead of time. They're not going to trade with you on these weird markets. Like, they're not going to do some foolish trade with you, but they let these prices just ride all over the place. And if we were to pick out, like, let's say instead of this 20 December, let's say if we go to 13 December, a lot of these markets are like no bid at 212, this kind of thing. So you really need to be real careful with this stuff when you're trading it because, once again, the markets are all over the board. So ACB, this is kind of playing with fire here, but it's been in this kind of channel thing lately. And so I've been messing with it. I bought it here around that 360 level, bought 2,800 shares, sold it up here around 380 level, was like, and then boom, it went back down to 360 again. So bought it 363. Now all the way up here again, and I'm kind of hanging out here deciding if I'm going to sell it or not, or if I'm going to look for a little push higher here. But the MJ is getting a little bounce today. There's still that question in the air: are the MJs bottoming? And when you've got a trend, until further notice, this stuff is still kind of going down, right? I mean, look at this. Here's 20-day. That doesn't show us anything. But let's say if we go out to like 180 days. Whoa, yeah, that's the story, right? And yeah, it's kind of flattened out a little bit here for a second, but that doesn't mean it's not going to go lower. So have these bottomed out? Well, it's not like a capitulation type thing where it went way down, then went way up, and now it's up way higher. No, it's just kind of grinding sideways here. So nobody really knows. market is a tough one to trade because, you know, we're just off the all-time highs. Who really wants to buy the all-time highs in the market? I certainly don't. I mean, it's hard. Now, obviously, individual issues are not at all-time highs, all of them, but the overall market, it's hard to buy some of this stuff at these. I don't know if you can say lofty valuations. It's very hard to figure out how to value any of this stuff. But look at Apple, for example. Yeah, do you want to buy it there? It seems kind of like, well, maybe I should wait till it pulls back, you know, a little bit. Look at Carvana here. Carvana has pulled back a little bit, but look at that volatility. This thing's all over the board. Anyway, so I've had to switch to tethering my phone to get my network going here. I'm not quite sure what's up with the internet connection. But I don't really want to pay for both phone internet and home internet. Maybe I should just pick one or the other. That being just pick the phone one, because why pay twice for the internet? I guess. I don't know if I can really stream effectively over my phone. I guess that will be kind of the deciding factor here. Meanwhile, SCIF, this one, I was thinking like, oh, I'm going to buy this, and I'm going to be able to buy the bottom, and I kind of did. I bought it around 30 here, but then I sold it back out. This is this India small cap ETF. And, you know, when I listen to these Warren Buffett and disciples, these investors who made these huge returns, I'm thinking to myself, I need to be thinking more long term. I need to buy something like this and just hang out for like years until it, you know, really rallies and comes back and makes that big percentage. I can't be taking these little cuts and then leaving. And that's the same thing I'm thinking about with this ACB. Instead of, you know, making $1,000 and taking that little cut and then leaving, I need to be like into some of these things where I pick a couple names and I ride them for years and they make me big profits and my account shows these big returns with a little less trades. It's very hard. One of the challenges for me is not over trading. I want to be doing stuff, and when there's nothing to do, I still want to be doing stuff. So I guess what I need to do is go play a video game or something that's not going to impact me financially when I get restless like that. I mean, Aurora, I think I need to just commit to this and say, okay, well, I'm going to get long it here, and even if it goes against for a while, that's going to be my commitment. It's just I have such a hard time doing that. Beyond Meat. Now, I know some people are saying, oh, this is a great buying opportunity here. This, once again, kind of falls into the category of, oh, well, the trend is down until further notice. You know, nothing has really shown me that trend has ended. I know people have these various different things for confirmation and whatnot, and Elliott waves and all this stuff. But, yeah, Beyond Meat seems like it's still going lower. Now look at the story on that. Whoa, this was one of the biggest touted IPOs of the year, and it's kind of crumbled. It was all the way up to 239, now down to below 80. So it's like, whoa. Anyway, so that's what I've been doing. I've been kind of babysitting this UVXY position. I've actually kind of considered my risk. You know, your risk always in this, I believe, is that big spike to the upside. Yeah, this can grind lower, but where we are with the VIX 1242, and it feels like the risk of a bigger move is more to the upside than to the downside. Yeah, I'm short some of the 15 puts with like a little over a month to go, but $3 lower from here, it seems like it's going to be harder for this to grind lower than for it to pop higher. So more worried about the upside than the downside. Can this get to 15 in the next month? It certainly could. Can it go significantly lower than 15, like quickly? I don't know. We'll have to wait and see. My position is I have this condor on, and what does that mean? That means essentially like I'm short the in my mind, I'm short the 19 calls, and I'm short the 15 puts. So it has to stay between 15 and 19. Otherwise, if it goes significantly through either of those strikes, I'm going to start losing money. And my losses are capped, but still, I can lose a good portion of money if this doesn't stay between 19 and 15. So the worry right now, it's still above 18. So we're closer to it breaking through to the upside now than to the downside. So my worry is kind of to the upside. And if I look and analyze my position here, if I go to the Analyze tab, and you can see it down here below. Let's see if I can blow this up a little bit. If I were to buy like 100 shares of this, it would significantly help me for like 100% up move risk. So you can see now 100% up, I lose $6,000. Okay, if I were to buy 100 shares, I can cut that by $2,000 for 100% move. Now, likeliness of 100% move isn't great. However, it's out there still. And buying 100 shares, I feel like I can manage this to the downside, because it's not like you're going to wake up one morning and this is going to be down $4. Nothing can happen that can make this go down $4 in one morning, right? Because for it to go down, like, nothing happens and it slowly grinds lower. It's not as if we are up, volatility's 20 and this can crash. The VIX isn't going to like quickly go from 12 a lot lower. Now, over the time of the expiration cycle, there's still $2 between the VIX and the front month future. The VIX is 12.42, front month future is 14.48. So those two need to converge before expiration in the next 2 weeks, whether it be the VIX popping or the futures going lower. Let's pull up VIX Central, and I can show you more what I'm talking about. So if we look at VIX Central here, there is a lot. It doesn't look like it from the chart until you look at the numbers, but there's $2 of space between the front future and spot, and that $2 needs to be erased in the next 2 weeks, because, well, if you think about what's the nature of a future. Oh, geez, this is off the screen, isn't it? There we go. A future is like the future value of something. So as the future comes to expiration, it's no longer the future anymore, it's the present, and so the two need to converge. I have had people come on, and maybe people found me, maybe they were just trading stocks on StockTwits or something, and they found me, and they see me tweeting out these contango update things. You know, I'll go online, and I'll do a contango update. In fact, let's do one right now. And how do I put this together? Well, I go to my screen, and I look at, okay, what is the price? You know, it's pretty basic how I come up with this stuff. So let's pull up this screen. I'll get out of the way. So I say, all right, what's the price of the VIX? Well, VIX 12.42. You can see that top line there, right? So if I take the second month future and subtract the first month future from it, so what would that be? So 1606. 1606 minus, now it's 1605. 1605 minus 1448 is 157. And if I take that 157 divided by the price of the front month future, which is, once here, 1448 now, then I'm going to get my contango percentage. So contango percent is currently 10.8. So once again, I subtracted the front month future from the second month future, and I divided that result over the front month future. So I get contango is 10.08%. So then I can go on my StockTwits here, and I can say, what's up, guys? Contango is 10.8% right now. And how do I get the rest of it? Well, I get the difference between spot and the front month future. I just subtract the front month future from a spot, and right now that's $2.06, 1408 minus 1242. And so these numbers, I think some people come on, they're not familiar with the VIX or UVXY, and they're like, well, why are you giving me this information? What does it mean? How am I going to make money trading based on this information? So let's just go through that for a second. Well, what I'm doing is I'm just describing this chart right here that we have in front of us. And what does that tell us? Well, as I said before, we know that spot price, which is 1242 right now, and this front month future have to converge within 2 weeks. So what that means is if the VIX stays here, UVXY is going to move lower because this future is going to move lower. Now, as we get to expiration, this future is going to become less and less important into the UVXY price, right? Because as we get closer to expiration, this future, it doesn't have 30 days left till expiration. It only has a couple days left. And so it doesn't help us with the UVXY price. The UVXY price needs to be based on 30 days out. So a future that's only 5 days out is not going to help it very much. UVXY becomes composed more and more of the second month future. However, the fact that these futures are in contango is still going to weigh on us because this 11% is still going to go into the calculation for the index SPVXSP ID, which UVXY is based upon. So knowing the difference between spot and these two futures tells us how much potential we have for UVXY to move lower, because these two futures, there's gravity force, very much like gravity, pulling these two futures down lower. So if we take out our little tool here once again, there is gravity pulling these futures towards spot, and spot towards the futures. And if spot doesn't move, then the futures have to move lower. Now, as we get towards the end of the month, right now, you could think of like the difference here as we move to the right on the chart. You can think of this distance here being the monthly expiration cycle. So, for example, the first day of the month, we would be here on the chart. The second day of the month, we would be here, and so on and so forth throughout the month. Now we're like between halfway and 2/3 through the month, so we might be like where I put that last line. We might be like right here on the cycle. And so the distance between where we are right now and spot is the potential we have for these two to converge. And we don't know which way they're going to converge. We don't know if spot's going to move higher or the futures are going to pull lower. It depends on a lot of factors. But we know when this is wide that something's got to give. And that is basically what I'm describing when I put up those contango updates. Don't be confused that it's some sort of predictive thing, because this doesn't predict what the VIX is going to do. It just tells where we are in the structure. Predicting what the VIX is going to do, I'll leave to somebody else. But currently, as we're almost at the all-time highs and not that much is going on, realized volatility of the SPX is low because it's not moving around. If you look at E-minis down 2, the range has been very narrow today. And as realized volatility stays low, that forces these futures down towards spot, and it also forces spot lower, and thus we see these things moving lower. And they try to keep these futures up, but as we get closer to expiration, things just pull lower. And we see contango increasing to 11% now, which is pretty high. I mean, this stuff is it's definitely pretty high. All right, so that's where we kind of stand right now with spot and everything. I was just talking to somebody at one of my side jobs who was saying like, well, I'm new to the market and stuff, and I watch your channel, and it's just totally confusing to me because it doesn't, I don't know about the VIX, and it's too specific, and I kind of apologize for that. I want to try to be more encompassing with my channel and stuff, and help people just generally with financial advice and whatnot. And I just to give some general guidelines to people, the most important thing you can do is to get a good job where you're bringing in a good amount of income. And then the second most important thing to do is to live below your means so that you can save a good amount every month and put that away. Once you can save a good amount every month, then you can start to decide how to use it, whether it be for trading, investments, real estate, other investments. But so many people are just stuck on this spot of either they don't have a good enough job or they're not living below their means. Now, you should be able to live below your means no matter what job you have. You have to figure out a way to live below your means. And it's a self-discipline thing. Until you can learn how to save money every month, you're not going to be able to make money investing. And it's not, and you should focus on that. If you have bad behavior that's costing you money, you should focus on that first, whether that be ringing up credit card bills, gambling, drugs and alcohol, this sort of thing. That is all going to tie into whether you can be successful financially and successful in general. So, one thing at a time. Until you can learn how to save money, you're not going to be able to learn how to invest it. So focus on the first things first. And the ACB seems to be rallying a little bit here. It's almost to the point where maybe I can just take this trade off. I'm just going to pull it up while we're here and we can take a look at this together. So this is an account under my. It's an account that is in my my 401k, and I'm actually not going to pull it up here. But essentially, I'm long 3,000 shares of ACB, and we can see it rallying today. It is up 20 cents right now, and so 3 times 20 is $600. That's a nice thing for a day for my little account, and so I'm thinking about getting out of this. But we'll have to wait and see what happens. All right, so there you are. I'm blathering, babbling enough. But I do like to come on and say hi to everybody and let you know what I'm up to. And I am scheduling a bunch of interviews coming up, so hopefully you can check that out and hopefully you enjoy it. If you've got ideas of who you want to see me talk to, please leave those in the description. Thanks for your support, and I'll see you soon.